All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it. This week here, do we have inflation coming back? We'll talk about the inflation data we received this week, amongst other things, and looking into the following week here. But first we have S&P here making a new all-time high, so nothing new there. We have been talking for a while about the 6,500 handle as being kind of a target to get to, and we essentially got there this week. I mean, 64.81 to me, that's it's close enough for government work, so we'll call it essentially tagged. There is a chance we could still go up there and get it. But we are kind of pinned right now. I'm doing this video Friday afternoon. There's still about 90 minutes left in the trading day, and it is options X for the month of August. So markets are kind of just in a tight range and quietly pinned down at the moment. With that said, the big news this week, as I mentioned a minute ago, was the inflation data, and markets liked CPI on Tuesday. So you're going to see we had a softer than normal CPI, and we had bonds rallying. So yields came down here on the twos. I think the market was starting to price in 3 cuts, and then it kind of fell apart on Thursday. So PPI, which is a leading indicator to CPI, with pretty much like just a massive beat here. So 3.7 to 2.9 year over year, month over month, almost like a 5x beat there, with jobless claims in line. So no weakening, no signs of the economy weakening there. And Michigan inflation today beat there on both sides, and miss in sentiment. So inflation starting to wake back up here. And if we take a look at bonds, again, flip back over to yields here. There was, again, 3 rate cuts starting to get priced in. It's now down to 2. Now, we will get a September 25 basis point cut. And that there is plenty of room for the Fed to do that. I've been saying that for a while. EFFR is at 458. We're currently at 375. There's plenty. They have almost 100 basis points of room. So there's really no reason to not be able to cut 25. Granted, 25 is basically nothing at this point, but it's still a cut. What will be interesting, though, is next week, Jerome Powell, what does he say at the Jackson Hole Symposium? And we know that market turning points can happen around that time. We're going to go into a period of a little bit weaker market maker flows. We'll have a little bit less support. So that is a risk here. And if he gives out some bad guidance, the market may not like that. So we'll be watching the 2-year. The 30-year bond, so inverse the yield. We can look at TLT if you like. This was starting to firm up earlier this week, and really the last couple of days it's come down. So the yield is starting to curl back up here, and that could be a concern for the markets moving forward. Granted, we have no damage on the charts, and by all accounts, it looks like we're going to close above the reversal candle. So from a technical standpoint, there's no damage here, no real cause for concern. You can see the Qs still holding up pretty well. And again, they're likely going to close above that high as well. So from a technical standpoint, no damage, but we are coming to a little period here where I think there could be, dare I say, some actual risk here. And you guys know I've been very, very bullish pretty much the entire way up here, only calling for small periods of risk, or namely back here, that back end of May, which gave us a quick pullback. But we'll see. We'll see how this plays out here. If this does start to dip, something the market doesn't like, there will not be any real dealer support until we get closer to September or mid-September, really. So right now, a loss of 640 on the daily would be a problem, and then really like 630 SPY, that starts to get your kind of a little bit of a quantitative pickup in dealer hedges. So right now, again, no problems, but there are a few things that could derail the market just a little bit. A couple of other sectors that have been moving as of late, We usually cover, well, let's cover the Russell first, and then we'll get into that. So the Russell did have a nice jump. We talked about 230, been talking about that for weeks, and it finally got there, pulled back the last 2 days. As long as this holds 225, it can try and push higher here. By the way, Putin has just landed inside of Alaska, so we may be getting news over the weekend. So if that happens, the market may like that, and that could be a catalyst for maybe the Russell to jump higher. It could be a catalyst for the S&P to hit 65 or try to get above it. So there is weekend risk here on both sides, I suppose. But the Russell did have that push higher, and the Dow is likely going to make a new weekly all-time closing high. So we had a few movements in those laggard sectors. Also, if you recall, in the mid-year wrap-up I did with Jason just a few weeks ago, I talked about healthcare, and one of the stocks that's been dominating the headlines today is UNH. Buffett buying, stock up 14% now, and beautiful sweep of that low, closing back above 250, and this was just announced in the 13F here. We also had a nice discount on Eli Lilly. Very nice level here. Take a look at this technical pattern, or technical level on the weekly. So retesting that breakout and nice rebound here. So there are sectors that are starting to play catch up now. One of those, obviously, namely being healthcare, and that has been a decent trade here if you're willing to step into some of these levels when stocks get cheap. So there is still opportunity out here. You don't have to chase tech. I can't chase the Qs at these highs, but there are certain stocks, certain things that have been providing opportunities here, and if you're ready for them, they can reward you. XLP, the defensive sector here, also with a nice kind of consolidation base that I'm watching as well. And I think we talked about utilities recently too, but that has broken out over the last couple of weeks also. So certain sectors playing catch up here. We got the semis down 2.19 here. I think 300 is going to be a little tough for that to get through right now. IGV remains weak. So I don't love this pattern here. I don't hate it, but it has not rallied with the market, and it is not challenging that engulfing candle high like the semis have and like the Qs have. So cloud, a little bit weaker. So maybe that run's coming to an end here. It's been a good one. Transport's inside day the last 2 days. It did bounce. What I don't like is, again, steep divergence here from the transports to the spiders. So I do not like that. XHB was another catch-up sector. XHB is acting as if we're getting 200 basis points of cuts. We're getting 25. Buffett also buying, I think, Lennar and I think one other home builder. So maybe that got leaked out. But nonetheless, XHB rallying. IYR, not really much going on. We'll see if this can catch up here, but has been a bit disappointing. I did dump it a week or two ago for a very small gain. Had the right idea to get into housing. I wish I had picked XHB, but nonetheless, sideways weak. We won't make too much out of that. XLF here with a possible lower high, not by much, but it did get outside of this base, which is at least a positive. And we had KRE recovering this week also. So nice move earlier in the week there. Broker dealers still off the highs or just at the highs. And then we have oil here slipping and maybe losing 64. So this is, I'll give this the downside bias down to 60 unless it can reclaim 64. I'll say this. It's not behaving as if the market knows anything about Putin and what Trump and Putin are going to do. Usually the tip-off is there'll be it's obvious. Yeah, you'll see. At least at this point, I don't really see anything that's tipping me off. That said, XLE, it was in trouble last week, but it did bounce back. So it has gotten back above that 86 handle. And yeah, that bear pattern may have failed here. Or it's close to failure. I know some of these paid dividend. I know Exxon paid a dividend today. It looks like it's down, but it's actually green. But anyway, XOP flat on the day. OIH down $1. Speaking of dollar, this was interesting to me too. So PPI coming in scorching hot yesterday. Michigan coming in very hot today, and the dollar not really. I mean, it bid for a minute and then it sold off. That's not good. The dollar should be rallying on that type of news. I don't know. Maybe this just has to do with the monthly OPEX here today. In fact, it would not surprise me if that's the reason exactly. So sometimes you can get some funky moves that don't make any sense on OPEX, but the bottom line is it's holding this higher low, and it needs to stay above this. It just has to. Otherwise, it might go down to double bottom here. Yeah, I know there's a lot of shorts, but that doesn't really matter if it can't get anything going on good news. And if the levels break, then they break. So having a lot of shorts is good, but you need a macro trigger. Gold here, kind of a down week. Nothing horrible on this. It's just been hammering on 3,500 on the futures for months. And it's building a base. What I like about gold here is the miners are making new highs. right. That I know you might need to sit down for this, and a lot of you guys are gold investors. But what if I told you GDX is almost at all-time highs? It doesn't feel like it, but and that back test, I'm kicking myself for not getting that because I saw it when it happened. But that was your chance right there. But they're not far from highs, new highs. Now the juniors are not. The juniors still have a long way to go. These won't catch up because of dilution and stuff like that. But I mean, they'll catch up. But I don't know if they're going to go to all-time highs. But SIL, same thing, right into. I mean, just look at this. I mean, 54, 55 bucks, really. So that's your level on SIL. If it can clear that, it's it's in a bull market, right? So this is your all-time bull bear line, really. And SILJ, same kind of deal, looks all right. Silver monthly, weekly, still got a bull flag. Daily is a little messy. Platinum, palladium, just staying in a rail. Actually, palladium slipping a little bit today. So next stop is 1100, and then 1070, maybe 1050. Copper is still in a range as well. It's trying to build a micro bull flag here. We'll see what it does. I still have a tiny position in this. That's deeply in the money. So we'll see if it goes up and tests 460 next week. Lastly, we got Bitcoin reversal. So good reversal yesterday. Really, man, messy. This is both sides getting clapped here. So you got a shooting star after making an all-time high. Usually that can sometimes mean a reversal. And I said the day that it happened, I was like, it doesn't necessarily mean. And then we went up, made a new all-time high. So you think, okay, all the shorts get stopped out. Then an engulfing candle the next day, and then like minor pause kind of follow through here. So both sides getting chopped. 116 though, as long as it's above that, it can still recover and just go higher. It loses that, then it's got to do more backing and filling. Keep it simple. Ethereum got really close to new all-time highs, and I don't think did it get there? I might be wrong. Am I late on this? I'm probably late on this. 47.91. I think it was. Yeah, so it got very close. Maybe on some exchanges it touched, but it got really close. This should at least try to do that here. But alt's still leading. You can see the higher highs obviously versus the basically equal highs on Bitcoin. So alt's still doing well. Again, markets here holding up fairly well. See intraday, yeah, we're hanging in there. Maybe they try to run it up into the end of the day, but I think we're mostly pinned again. I never like to bet on trend moves on the monthly expiry day, but nonetheless, markets right now have Jackson Hole next week to look forward to. We've had a lot of supportive flows over the last couple of weeks. That will go away next week. So if there's any sort of catalyst to the downside, and I'll say the same thing that I said right here, dealers are not going to come in and save the market. So I don't think we're going to have anything like that. But again, been just saying to trail stops, harvest gains, and just tighten up at this juncture. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. I'll see you guys all next week.